I'd love to talk a little bit about a few things that have gone on. I mean, you mentioned the call optionality to municipal bonds, and when Chairman Powell said, "Hey, we're dropping rates, and we're dropping rates again, and we're just going to keep printing money," he's basically telling us what they're doing. It seems like that was one aspect, but you also saw some media headlines that came out around stimulus, how much perhaps states might benefit or receive or not receive, and that caused some noise too. So maybe talk a little bit about what happened there, because in addition to the call optionality that impacted prices, I feel like there was some noise there as well, briefly in that space. Maybe share about that.
Yeah, I'll refer to them as muni tourists. So every you'll munis are a fascinating market in the sense that it's a $4 trillion market. So it's a huge market. It's widely owned by investors. Um, but for such a large market that's so widely owned, there's very few specialists, and just in relation to how big the market is. And so if you think about it, right, if you open up the Wall Street Journal every day, there's a story on stocks, guaranteed, right? And there's probably a story on bonds or distressed debt or one of those sexy things out there. There's almost never stories of municipals. And if there is, it's maybe once a month, and it's some sleepy whatever story. If you turn on the news, CNBC, right, they talk about munis once every 4 weeks, again, 3 weeks maybe, and everyone probably changes the channel, right? And so it's this huge market, and it just gets really little to no coverage in relation to the rest of the aspects. And the other component of that is there's just not a lot of people that spend every single day in that market and are really experts in it, right? And so what happens though is we always say 3 to 5 years, you get one of these events in the muni market. And it's like everyone decides for whatever reason that all these macro tourists are going around and they're pontificating on rates and Fed rates and corporate bonds and EM stocks. They'll just one day, for whatever reason, whatever events occurred, decide I need to pontificate on munis, right? And so it's like it's coming into an incredibly complex market that, again, there's about 70,000 issuers in the muni market. There are, if you think about it, the S&P 500, it's 500 stocks. Compare that to 70,000 individual credits. You're talking about the largest, most widespread, structurally broken market that exists on the planet, I would argue. And so, but again, people come in and they just come in and just will make a sweeping statement about a 70,000 issuer market, right? You can't do that. It's just not possible. There are so many different dynamics going on with the different types of municipal issuers, the states, the counties, the underlying demographics, the populations. You can have, during the global financial crisis when everything was going down, there were absolutely credits that were improving during that period, right? Because you just never have something where everyone's moving in the same direction because there's so many different issuers and they have so many different sources of income. And so what happened is that, of course, people started pointing to, again, and I always bring up Meredith Whitney, which, went on 60 Minutes, and we had this dramatic blowout in municipal bond yields, right? And it turned out to be totally unfounded, right? And so, and we actually had one of the strongest periods of returns we've ever had since that Meredith Whitney point. And so I would always caution when you get someone who does not spend every single day in that market and they're pontificating on it, to really, give it a second thought, or at least ask someone who's spending every day in it. And they may agree. There's certainly points I do agree with people on, right? I agree that the number one credit issue in muni markets has always been public pensions, right? Underfunding of public pensions. That was an issue 10 years ago. It was an issue 20 years ago. It's going to be an issue 10 years from now. It's going to be an issue 20 years from now. It'll probably be an issue when my kids are buying me muni bonds, hopefully, right? So it's not an issue that's going away, and it's not an issue that's just showed up. The severity of the impact is meaningful, and I do think it's gotten meaningfully worse from here, right? So what I would say then is, okay, public pensions have gotten worse. Well, there's a huge portion of the market that doesn't have any outstanding pension liabilities, right? And so you can't just come in and say the muni market is in trouble. Well, 40% of the muni market doesn't have a pension. So how are they in trouble by this issue, right? And so again, what I would really say is, and our whole case we've always made for how we manage money in the muni market is that, listen, there's a lot of issues out there, but tucked away underneath this market, if you have the right manager and they're really digging and they're thoughtful, is one of the most attractive investment opportunities that exist for people that have taxable money. And we can prove that not just through me saying it, but just past performance, right? You've done unbelievably well if you were in municipal bonds and you were in a high tax bracket. You've outperformed literally every fixed income asset class besides high yield. And that they may actually have outperformed high yield now, given that high yield's had a negative year, right? So you've taken AA credit risk, super high quality credit risk, so very little, and you've outperformed high yield or junk bonds, right? And within that, if that's just the index, within that, if you can dig in and you can provide alpha on top of that index, while hopefully actually taking less risk, which we think is possible in the market, I mean, you're talking about tremendous investment opportunity. So within that, I mean, that's my view being in the market. But again, hopefully that kind of clarifies on why someone goes on CNBC and they throw out a 30-second snippet. It's just everything is incredibly complex. You just can't generalize in the market.